Big news for crypto traders, miners, and everyday users. US lawmakers just proposed a major overhaul of crypto taxes with the new Digital Asset PARITY Act. If passed, this bill could close billion-dollar loopholes, change staking rules, and make small crypto payments tax-free. This is huge, right? It's going to get rid of that annoyance, and it is huge for anybody who holds crypto, trades crypto, or uses crypto in the United States. All right, guys, welcome back to Ledger Prime, your go-to channel for breaking crypto news, updates, and analysis. Today, we are breaking down the PARITY Act, not to be confused with the Clarity Act, which is coming in January, but the PARITY Act. What it means for traders, miners, and everyday crypto users like you and me, and why this could fundamentally change how digital assets are taxed in the United States. So on December 20th, which was just 2 days ago, on December 20th, bipartisan lawmakers Max Miller and Stephen Horsford introduced the Digital Asset PARITY Act. This would target a modernized framework for crypto taxation. So here's the headline. This bill applies wash sale and constructive sale rules to digital assets. That means traders can no longer sell a losing crypto position to claim a tax deduction and immediately buy it back, a loophole previously exploited to save billions. Instead, you will need to wait 30 days before repurchasing, which would force traders to rethink portfolio strategies during market downturns. So what are they saying? So currently, if you buy Bitcoin, say you bought it at 126K, now it's at 80, whatever, 86. Right now, you can sell it and buy it back, right? Sell it at 86, so you bought it at 120, sell it at 86, buy it back at 86. You would be able to claim a $40,000 loss, short-term capital gains loss on your taxes because the wash sale rules aren't in effect. They're proposing to turn that on like it is for stocks. So lawmakers are pitching this as clarity, fairness, and parity for crypto markets. Max Miller said it protects consumers, ensures clear rules for investors, and strengthens compliance. So what does this mean for miners and stakers? If you're somebody who, stakes your coins or you're actually mining Bitcoin or something, right? So to balance the tighter trading rules, the PARITY Act introduces a huge concession for the supply side. Staking rewards and mining income can now be tax deferred for up to 5 years or until the assets are sold. This solves the long-standing problem of phantom income, where validators or miners owe taxes on illiquid tokens they cannot sell immediately. In other words, the bill removes a major liquidity headache, making staking and mining operations in the United States much more feasible and less risky. All right, so if you're not in the mining game, if you're not staking a bunch of tokens, here's how us as everyday people, everyday Americans can get some relief out of the PARITY Act, right? So retail crypto users like us, we will also benefit. There is a de minimis exemption, which will eliminate capital gains taxes on transactions under $200, as long as they're made with stable coins compliant with the Genius Act. This means using Tether or USDC or USD1 or whatever, SoFi USD. This means paying for coffee, groceries, or small purchases with crypto will not trigger complicated tax calculations. Horsford explains that this targeted approach ensures consumers and businesses alike can benefit from crypto without running into constant tax friction. The bill also tackles charitable donations in crypto. It'll distinguish liquid assets from speculative tokens to prevent valuation abuse. The goal here being to support legitimate philanthropy while avoiding loopholes that could be exploited for tax avoidance. And all those rich people don't want to pay their taxes, right? So anyway, whether you're a trader, a staker, or a donor, the PARITY Act could make your crypto life easier, fairer, and more predictable. So guys, the Digital Asset PARITY Act represents one of the biggest crypto tax proposals in years. Again, this is just a proposal. This hasn't passed anything yet, but it is a proposal, right? And it's huge. It's going to balance compliance, consumer relief, and industry growth, and hopefully bring us into mainstream crypto adoption. So if you hold crypto, stake it, mine it, or spend it daily, this is a story to watch very closely. So stay tuned, guys. We're going to be covering updates, debates, and eventual passage of this bill as they happen. So make sure you hit like, subscribe, turn on your notifications so you don't miss any breaking crypto news. Ledger Prime brings you the updates that matter, fast, clear, actionable. We want signal, not noise. We want to protect our capital and we want to make money. Okay, so remember though, guys, this is the world of cryptocurrency. It moves fast, it's highly volatile, which is why we need to stay focused and lock in because the world is about to be tokenized.